Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Kathleen Servidea. Kathleen is the General Counsel and CCO at Gallatin Point Capital, a private investment firm that specializes in making opportunistic investments in financial institutions, services, and assets. We can't ignore the fact that AI is playing an increasing role in our day-to-day lives, but the question is, how do we do it properly? So I turned to Kathleen to get her insights on bringing AI in-house. We cover a range of topics like how to develop an AI policy, how do we identify and assess the growing list of AI service providers, and once selected, how does one perform proper legal and technical due diligence? As an ops or legal professional, what can you do yourself, and when to bring in third-party vendor due diligence providers? We also discuss the state of legal tech today and how things like ChatGPT and Perplexity AI can play a role in the fast-moving pace of investing in our highly regulated world. This information is provided for general information purposes and should not be considered legal advice. For specific legal advice, please consult your own legal counsel. And with that, please enjoy my conversation with Kathleen Servidea. Kathleen, I'm excited to discuss AI from a legal and compliance perspective today. But first, I'd love to hear about your career path.
Scott, thank you for having me. I'm excited to be on your show. I graduated from law school in 2001. I went to Boston University Law School and went from there to Boston to the New York office of Decker, where I was an associate in ABS and CMBS transactions. I stayed there for several years, learned a lot, I think, as most young big law associates do, because you just work so much. Loved the work I did, but received a call from a recruiter out of the blue about an in-house counsel position at a reinsurance company. I don't think I knew what a reinsurance company was at the time. And they were looking specifically for a more junior lawyer who had esoteric structured finance experience. That's what I did. A lot of bread and butter, sort of run-of-the-mill securitization. But at the time, they were well known for transacting in the esoteric securitization space. I interviewed for that job. After several rounds of interviews, ended up getting it and taking it. Again, I don't think I necessarily even knew what I was getting into, but I liked the people and the allure of being in-house. Ended up taking that job and staying there for 12 years. So that job at the reinsurance company, it's called PartnerRe, it still exists, I think forms almost the bedrock of my career simply because I spent so much time there. They take in premium dollars, and one of the business lines is essentially to manage those premium dollars, which they did at the time primarily in-house. When I joined, we had an emerging internal asset manager where we managed all of the reinsurance companies' premium dollars, and they were building out a group that was focused on alternative fixed income or esoteric structured finance. So I started there as the legal support to that group. And over 12 years, that role grew from being a securitization-focused lawyer to a much larger one. After they started the internal esoteric structured finance group, they then started an internal strategic investing group. And we used strategic investor, but it was really anything in the financial services space. So they would make equity investments in other financial services companies. And I ended up becoming the de facto lawyer who did that work. I had no experience. My prior experience had all been on the debt side in these highly structured debt transactions. And I was suddenly now the lawyer looking at equity investments. And I learned that on the job. I relied very heavily on our external counsel and was a student of the subject. I sat on every single call. I listened to every single argument that they made. I reviewed every single markup with the goal of learning this business. And I did. So I ended up, and it's funny, sort of fast forwarding to now, I do much more equity work than I do debt work. I did that while I was at PartnerRe. I now am doing structured finance and equity finance, and at the same time doing general corporate work. At some point in that 12 years, early on in the 12 years, we built a compliance program. We're an internal manager, so we were not required to register as an investment advisor with the SEC, but we held ourselves to the standard of a registered investment advisor. Now, the issues that you face managing money for only one entity versus a commingled fund are different, but nonetheless, we created a compliance program, and I was very much in the early weeds of doing that.
Is that because it was such a large organization with a lot of people, a lot of transactions? There's just a lot of things you could step on in terms of just challenging from a transactional perspective?
We had a few different focuses of the compliance program. One was just what I think of as the code of ethics. So we would routinely receive MMPI and making sure that we had policies and procedures around the receipt of that MMPI. And then that very naturally bleeds into oversight of personal trades. So when I first started, we weren't really doing any of that. And we ended up basically building out a code of ethics around. We started tracking people's personal trades. We started pre-clearing trades. We started keeping a restricted list, doing the sorts of things that we do every single day.
Was that hard because it wasn't mandated?
Most of the people who worked within the investment division had some background, whether they had worked at a bank before or on a trading floor. And so when we rolled this out, they were very, oh yeah, that's fine, receptive to it, because the most of the business was not investing money. It was the primary business of reinsurance. And so then the question became, do they become subject to the compliance program in the investment group? Ultimately, the answer was no, they don't. We created walls, but like literal physical walls that separated us from the primary business. And that sort of enabled us to limit this compliance program that we think is totally normal, but is very invasive to someone who hasn't been introduced to it before. We're able to keep those separate. But if somebody said, I actually want to sit on the second floor in this space, then they would have had to become subject to our compliance manuals.
How long were you there for?
12 years, the longest job I've ever had. It was a time of tremendous growth for me, both as a lawyer. When I started, I had spent 3 years at a law firm. By the time I left, I was 15 years into my practice. When I started, I was in my 20s and single. When I left, I was married. I had 2 kids that were well into elementary school. So that job supported me through a lot of life change. But at the same time, I had a tremendous amount of professional growth. But between the debt investing and the equity investing and the compliance building, also during that time, I had exposure to workouts and to litigation and to employment matters. So I think that really set the stage for me to move on to a bigger, broader job once I was ready. In a lot of more junior in-house roles, you don't necessarily get that level of exposure. We kept anything investment related stayed within the investment group from a legal perspective. If there was a workout on an investment transaction, we handled it. If there was litigation, we handled it. I had a lot of touch points for somebody who was in-house and who specifically in 2004 was hired to do one limited thing, which was securitization. Anyway, I then became deputy general counsel of a broker-dealer where I ran the corporate legal department. And that is the job that ultimately led me to where I sit now, which is general counsel and chief compliance officer of a fund. And I know that might sound a little bit strange. And the reason it led me to here is that I didn't like it. And I think sometimes we have to try things and determine that we don't like them in order to figure out what the right path is. I had spent, I guess it was 15 years that I practiced before I took the deputy general counsel position, where I was essentially investing. I had my law firm training, and then I worked at an institutional investor where we did a lot of very interesting transactions. And I realized when I became deputy general counsel of this broker-dealer that I missed that. On paper, my job was great. I ran the corporate legal department. We were very acquisitive that this particular broker-dealer, a lot of them do, they grow through acquisition. So I was overseeing a steady stream of acquisitions. It was a big legal team reporting to me. But I missed the sort of smaller, more entrepreneurial investing that we did. Even though I was at a large company, it was a relatively small group. Ultimately, I left. The next thing I did was I joined one of the groups. We have to now rewind, but the very original group that I joined, PartnerRe, to support, that fledgling securitization group, had spun out of PartnerRe and they created their own fund. And founder of that fund wanted me to join as general counsel and chief compliance officer. They, by law, needed to have a CCO, but they were in no place ready to have a GC. But he felt strongly that he wanted me on the team. And they were very emerging, and it was a huge risk to go and to join them. But it was one that I was financially, having practiced for as long as I did, in a position that I could take. And I did feel if I was going to take a risk that I wanted to do with people I knew and who I had worked with and who I trusted. And I did feel if it fails, then it fails. And at least I will have transitioned to a fund, which I didn't have that experience before. And I will learn something along the way.
Did that play towards your inclination of one a little bit more hands-on as opposed to I'm overseeing a bunch of lawyers and I'm coming in and parachuting in as opposed to actually rolling up your sleeves?
Yeah, absolutely. And I don't think I appreciated how hard this would be. But one of the things that appealed to me was building a legal department and really getting in and, you're right, doing the work and being more intimately involved with the business team. I think it takes leaving an environment and trying something new to maybe realize, okay, that what you like and what you want and what brings you joy and happiness as a professional. I think many people would have said, you're crazy and don't do this. But the only person I really consulted was my husband, who supported me.
It's all that matters, actually.
Yeah. So I went there and did join them. It didn't work out, but it ultimately did. So they were not successful in ultimately raising the amount of capital they needed to continue to survive on their own. Long story short, through that job, I ended up here at Gallatin Point Capital, where I am general counsel and chief compliance officer. And I wouldn't have this job if it weren't for that one. But the original fund I went to work at, which was called EP.48, no longer exists. But I joined in 21 and Gallatin was formed in 17, but it had successfully raised its first fund. It was moving on to its second fund when I joined. They had very impressive investor base and really loved everyone I met there. They were doing exactly the kinds of transactions that I had significant background in over, at this point now, gained over almost 20 years of legal experience. And so it really did feel like, okay, this is the right fit for me.
Tell me about Gallatin Point, who they are, what it is.
Gallatin was formed in 2017 by Lee Sachs and Matt Botine. They are among two of the most impressive individuals. They're wonderful people on top of being wonderful investors. Our strategy is big. So for the uninitiated, that's financial institutions. Our current AUM is approximately $5 billion. We have 2 commingled funds. We are in the process of raising our third commingled fund. And in between funds 2 and 3, we raised a single asset fund around bespoke insurance opportunity that was inappropriate for our second fund. So that added a bulk of money to our AUM. That's where we are in our life cycle. Our focus is on financial institutions. So we make investments in insurance companies, insurtech, fintech, insurance-linked type investments, also banks and banking type product. I should say we're not necessarily a buyout fund. Everything that we do is a little bit more structured, but a good example would be a minority participating preferred equity investment. So something where we are protecting our downside while also giving room for upside. And that is almost like the culmination of everything that I've done from day one when I started working in structured finance to doing investments in financial institutions at PartnerRe to M&A at a broker-dealer. So now that kind of all came together. I'm too busy to do all of the deals here, but I have probably a more intimate understanding of the business that we do than I think the average lawyer or the average chief compliance officer would have by virtue of my background.
GC, CCO, how big's your team, responsibilities? How does that look?
I joined as the first lawyer, not the first CCO. I took over the CCO role from our CFO, who's also the COO. So at some point, the responsibilities, especially as you start to have multiple funds, blossomed to a point where it made sense to separate those roles. I inherited a compliance program and then had to build a legal department, which I've done that before, and it was still really hard.
What's hard about it?
Building a department that doesn't exist in an organization that does exist is challenging. People have their ways of going about their business in their day. And I created a bunch of new processes and you have to get buy-in from everybody. And I also was doing it alone. I came in as general counsel and chief compliance officer. And that meant on day one, reading and understanding our fund documents, reading and understanding all of the side letters, reading our compliance manual, figuring out where we were from a compliance perspective. We didn't really have, and I wouldn't expect, having not had an internal GC, any real procedures around the legal aspect of the business. On top of all of that, creating just a more institutional legal department, so to speak. That's just a lot of work. So when I say it's hard, I think it's because it is, but that is a lot of work to do on top of the fact that every single day there's just work by virtue of the fact that it's a job.
Tell me more about that. So is it a function of actually creating a framework? So you hire a bunch of lawyers who have to follow a consistent process. Is that what you're hinting at?
Not really. We separate it into the compliance function and the legal function. And there are some things that are very clearly legal function, like litigation. And there are some things that I suppose are very clearly compliance function, managing the code of ethics. And then there's a bunch of stuff in the middle that even in my own head, I sometimes don't necessarily distinguish whether it's legal or compliance. I came in on day one and had to assess where we were from a compliance standpoint. And our previous CCO built the compliance program in 2017, and now it's 2021. And we had just done an initial close on Fund 2. We had more people, and it was time to move from an emerging manager's compliance program to a more established manager's compliance program. So we just did basic things like moved the code of ethics from paper reporting system to ComplySci. It's crazy. Just doing that was time consuming. Eventually, I did hire someone who was able to take over that work for me. But every day we were fundraising. We were in the middle of raising a fund. So every day there would be a question around something related to our fundraise or marketing piece, or a new contract would come in. And then in the background, I was assessing the compliance program and determining where there was room for improvement. As somebody who took over my compliance program would also look for places where there's room for improvement. But in that first year, in addition to the code of ethics online, we had in November of 2022, we all adopted the new marketing rule. So that was a major update to the compliance program, and also a major update to all of our marketing materials. And we are a firm that markets, whether it's because we're raising a fund or we have a co-investment opportunity. And so that's, training people on those new rules. We also instituted a fair amount of testing. We bolstered existing policies. And just because it had been 4 years and it was time to reassess the compliance program. And then on the legal side, it was really about establishing that I should be the point of contact and becoming that point of contact for LPA discussions, for partnership agreement, it's the LPA negotiation, for side letter negotiations, broadening the external counsel that we work with, reviewing term sheets. That's something I'm very capable of given my past background, and inserting myself into those processes, which ultimately all in the service of trying to make the firm stronger from a legal and compliance perspective. But the first few years, and now it's 25, so it's not like it's been that many years, but it's been a lot of work.
One question that comes up is, how do you separate the CCO from the GC role? How do you navigate that line, assuming you even think that there's a line?
There will be a point where, assuming that we grow to large enough size, where I probably will not be the CCO anymore. And at some point, each role needs to have a dedicated full-time person. And I understand where GCs say that's a fuzzy line, and I want to make sure that I'm always protecting privilege and that there's no confusion around whether or not my conversations are privileged by also being the CCO. And sometimes the CCO and the GC can be at odds. But that being said, especially in a manager who's emerging or our size or even larger, I think it makes a lot of sense. And that's why you have so many dual-hatted GCs and CCOs, just because the compliance function is so regulatory heavy. And of course, we are trained to think constantly about new and existing regulations. I do feel that the roles blur together, and I'm fine with that. The places where I want to be very clear that there's a separation are when I think that I want a communication to be privileged, or I want to make clear that a communication is legal advice. In that event, I will do what many lawyers do, which is make sure that the communication is very clearly labeled. This is attorney-client privilege. This is attorney work product, so that there isn't any question down the line that I was acting in my capacity as a CCO, or I was even acting in my capacity as a business person, as GCs sometimes do.
I'd love to turn to AI. I'd love to just get your perspective about how you're thinking about it and from a legal and compliance framework. This is coming, whether it's here and it's still evolving. I just love your perspective on how you're thinking about it.
And am I thinking about it? I think is the other question. And the answer to that one is all the time. It's on my radar. I don't think there's a day that goes by that I'm not talking about AI, whether it's a general discussion with a friend around public policy or more sailing into this conversation, how are we thinking about AI from a legal and compliance perspective? And I think you're right that it is inescapable. And it has progressed. A year ago, we weren't really thinking about it all that much. It has progressed very rapidly to the point where right now I'm in the middle of creating quite far advanced an AI policy here at work. And we're talking a lot in the office around how should we use AI? And the real question is, how can we use AI to make ourselves better lawyers, to make ourselves better compliance professionals, to make ourselves better investors? I don't think that it makes any sense to fight technology. And just by virtue of my own age, I've existed through a time of rapid technological development. When I was a kid, we had no technology. And at some point when I was a teenager, we got this Commodore 64 desktop computer. And now we walk around with computers in our hands all day in the form of our phones, and we have AI at work. And I think that's great. Even when I look at my legal career, technological developments have made it better for me to practice law. Keeping that in mind, my goal as a GC or as a CCO is to find a way for us to all effectively use AI in a way that does not harm our investors, number one, and number two, that complies with all of the regulatory rules, or at this point, maybe just regulatory advice surrounding the use of AI. On the business side, we're talking through what is the business case? And we have people saying, I'd love to use AI so that I can be more efficient. And they're running a working group to think through, what is that? Is that specific AI to help build models? Is it an AI engine that helps you write your investor letter? These are all hypotheticals, by the way. They're doing that. And at the same time, on the compliance side, we're getting pitch products that sound very interesting. You and I were talking about one that helps to streamline marketing reviews. In 2022, we adopted the SEC's then new marketing rule, and there are quite a lot of regulations around what constitutes acceptable marketing for an RIA. And we've been pitched now an AI platform where you can upload your marketing piece and it will shoot back to you a marketing piece that has at least suggestions for footnotes, that it, at least from the demo we saw, it flags. That's not to say that we would never review a marketing piece again, but we spend a lot of time every time there's a marketing deck or of any sort in the compliance department, very carefully reading that and scrubbing every word to make sure that we think that it complies with the SEC's rules around marketing. And then after we do that, we take a step back and we look at the piece holistically and make sure that from a higher level content perspective, that the marketing piece is doing what it's supposed to do. And so if we can shortcut some of that by having a machine at least give us the first draft of the footnotes and flag the hypothetical performance and flag that we're the best in class manager, then that doesn't mean that we're not going to review the piece. It means that now we're going to be more efficient. We're certainly not committing to anything. I think some of the stuff that we're seeing that's coming across our paths is exciting, and I think will make us better and more efficient.
We're at this moment where if you look in the marketplace, there's a product or a company, a software company, for pretty much, I would say everything. How do you know what you actually think you might need?
I don't know if I know the answer to that. That's partly why the investment team as a working group is to think through, okay, we're just not going to take the first thing off the shelf. It's what's available in the market. Where do we see a need? And how do we best fill that need? And I can't speak necessarily to how they will ultimately use AI. I can only speak to what we would do in the legal and compliance department. And we're very hesitant to just adopt new softwares because they will pile up. So we are definitely still in the information gathering stage because I don't want to have, nor do we have the budget for 10 different new, in quotes, solutions to our problems. The reason I'm excited about the potential use of AI in marketing is that is something that is very time consuming. And I think, or I believe that a computer once taught would probably do an excellent job. I see the same thing with contract review, quite frankly. I think probably there's a machine that can review simple contracts. I'm not talking about complex M&A transactions, but your simple contracts probably pretty well. We're not doing that either. And the other place where, and this is now we're mostly using software, it's not AI, but we've adopted software to help manage all of our side letters. And that was one where we sat back and said, how much time are we spending on side letter management? The answer is a lot. And how efficient are we at it? And the answer is, I don't know how efficient. We're doing the best that we can, but investing in a software where we can more easily pull out those side letter provisions and more easily organize them probably makes sense and is probably also better for the fund as a whole and better for our investors.
Yeah, I mean, to save the cost savings there alone, if you look at typical deal flow from the time the compendium is built, if you do it in the manual way, I mean, you're saving time, money. So it's good for the investors, fund formation costs. It's good all around.
Yeah, absolutely. That was one of the ways we looked at it was when you have a human putting together all of this side letter process is a bear. And when you have a human doing that, it is very time consuming, very expensive. And it was something that was very well suited to some sort of machine automation. That was one that we did say, okay, we're going to invest in this.
Once you decide to invest in how, from a cybersecurity standpoint, how do you get comfortable, how to make sure that all your data is secure?
Mostly, I am leaning on people who are technology savvy. This also plays into the AI policy I'm writing, but we take vendor review very seriously. We have hired a third party to assist with vendor review, and we now do extensive due diligence on every single vendor prior to retaining them. And then all vendors are on a rotation so that we're constantly re-upping that review. We tailor the review to the vendor size into what they do. But for any vendor that is software or touches the cyber world at all, we engage in a fairly detailed point-in-time cybersecurity assessment. We do that through, again, this specialized IT vendor, and we also rely on our own IT support staff, and they produce reports that I get. I am not the tech person. I cannot speak the tech language, but the reports will be, I guess I want to say, dumbed down enough for me to understand whether or not there were real risks, and we will get green, yellow, red flags. We will collectively work with the vendor if someone comes back with a yellow or red flag to make sure that they're a green flag, and we'll be very clear that we can't bring you on. We are putting sensitive data into your system. And then unless you get a solid review back, we can't enter into this contract. And that motivates vendors to get in line.
Does this extend to fund administrators and independent auditors? Like, how far reaching should people be thinking about that?
We do every major vendor and also every small vendor as well. For some, if it's a small consultant that is providing some sort of business advice, maybe they get exempted because we don't need to do a cyber review on them. And the other thing that we like to do, we'll have this third party do, is business continuity, financial health. And if it's somebody that's doing a one-time project for us, maybe we don't really care about their business continuity or financial health. So again, it's vendor dependent. For our fund administrator, for all of our large vendors, we do engage in extensive due diligence.
Do people overlook the financial health piece? So if we go back in time, not too far, if you ask, hey, how's your financial health? They say, oh, that's proprietary. We can't tell you.
We haven't gotten pushback. We tend to tailor. So not every vendor ends up with a financial health review, but we haven't gotten pushback on it.
It's interesting because you figure out a lot of these organizations that are coming to market are fairly new. Maybe they're venture backed. There's a little bit of tension in the system by design because they're new and they're novel. But it's probably not a black and white decision on, I could make the argument and say, look, if you're going to go public, there's some tension there. There's just wherever you are in the capital structure, there's pro and con.
For financial health and business continuity in particular, we look at, do we really need you? So if you go under, do we have an acceptable substitute for the service that you're providing? And can we get by without it? And if the answer is, yeah, there are 10 other people who do what they do, or we can easily transition this to this other vendor, or we could manage this in-house for a period of time, then maybe we care less. And if we have a yellow flag on business continuity or financial health, it's fine. But if it's our business can't run without this third-party provider, then yeah, we really care.
Going back to the whole AI concept, do you think we'll get to a point where the bread and butter stuff will just be run by AI. And so legal advice, basic legal advice consulting will be, you can rely on the tools that are available to you, but then more focused on the more technical things and pick up the phone and call?
I think we will. It's not entirely clear to me yet. I don't have a crystal ball what the future will actually look like. But I've been around enough technological innovation over my own career that I know enough not to underestimate the impact that this is going to have. I hope it's a positive one that allows us all to be more efficient. And I don't think that it's going to be that we don't have a legal department or there aren't lawyers walking around or compliance professionals walking around. But I do think that over time, part of the job will be being able to effectively use AI or to lever AI as part of your legal work. And one of the things I worry about with any of these is that young people won't develop the foundational training that they need to, I think, properly use AI. So if you're saying to AI on day one, please review this contract, then you're not developing the skills that you need to review the contract. If you're saying to AI, please review this marketing piece, and you've never forced yourself to do it from scratch time and time again, then you're not developing those skills. And I think that as professionals and as fiduciaries, if we get to what I think needs to go into an AI policy, I think it becomes important that we're monitoring AI and we are using it as a tool to aid in our effectiveness, but we're not using it as a tool to do our work. I do think it will replace in some ways, just like we used to have lawyers who did in litigation, all of that document review themselves, and now we do it over a computer. So we'll see, I think, more of that through AI. I hesitate to use the word replace.
I think so too. It's one of those things where I think going from 0 to 1 on the draft is where most of the lift is. And you can get a pretty good starting point, but you still need to know, what am I reading? And does this actually hang together in a good way? And I think that's where we are today. It'd be interesting to see how things evolve on that front. What about LPs? Do LPs care about this stuff today, or are we in a wait and see mode?
I think we're in a wait and see mode. We get, by virtue of the fact that we have been fundraising and in the middle of a lot of operational due diligence, I'm hearing a lot of what LPs care about, which I love, because I think that only helps to strengthen our compliance and our operational program. But there hasn't been a lot of focus, thus far on AI. I think that it's, again, over time, I think there'll be more and more focus on it, particularly if we start to use it. And if we do, we'll have disclosure around the fact that we're using AI. And then I think that will become a topic of conversation. And I wouldn't be surprised if in the ODD checklist that all of these people use, if eventually there starts to be a big section on AI as well.
Do you think that's overblown? Because if you break it down, whatever you generate internally, whether it's done by a model or a human being, it still needs to be reviewed and approved by the compliance department. Are we overthinking a lot of this stuff by having people are so worried about AI and taking over the world? But at the end of the day, we're still going to control what leaves the building.
I think that's the crux of the issue is, are we controlling what's leaving the building? Not that policies and procedures solve everything, but I think that plays into why, as you start to develop AI, that you want to have a strong policy in place and procedures in place and training on it so that you don't have the computers running the show.
Is there anything you would tell people, where's the third rail on this stuff? What do you worry about here's the practical thing that I really stress about that could happen if you were going to be giving advice to people?
I have a few different worries, but one is, and the reason that I'm so focused on getting policy in place is people using it when they're not supposed to. And that is definitely not happening here, but using it when they're not supposed to, when putting confidential or proprietary information into an engine that we haven't vetted. And then there is a cyber incident and our confidential information has leaked into the public. So that is a concern. Another concern is that we rely too heavily on AI. So someone realizes, I can use this machine to build a model and then doesn't vet that model. That wouldn't happen here either because the people are too conscientious. You can imagine just societally or within the industry that happening, and the machine's wrong. The machine had a bias that nobody had caught, and suddenly there is a big problem that potentially reverberates throughout the financial system.
What about service providers? We're in a moment where fund admins, to a lesser extent on the audit side, but just your core partners in the business, and they're now building technology. How much can you rely on those organizations to give you leverage without having to buy and vet these tools?
I think certainly we want our service providers to leverage technology if it makes them better. So if Andra, who does our side letter management through a software, can leverage AI in order to more quickly and more efficiently upload all of our side letters and distill the terms, then we want them to do that. Or if our fund administrator can somehow use AI or advanced technology to make our operations department more efficient, then we want that. We engage in a fairly regular review and re-review of all of our service providers. And this is why, as they leverage technology and as they evolve their business, we are redoing that point in time cyber review. We are redoing what on any given moment, we may even retailor the review depending on what they're doing so that we're staying on top of what our vendors are doing. There's only so much that we can control, but we can control internally our processes around third parties, which is what we try to do.
A lot of movement happening there, especially with AML, KYC, automating that process of taking the week time and compressing that and digitizing.
So yeah, on AML, we were previously only running AML on our investors. And in 2021, I adopted a policy where we would run AML checks on portfolio companies, look at their cap table, so any of their major investors, along with all of the senior members of management. And we were doing that manually. So at every deal, we ask the deal team at the start of the transaction to fill out a few different checklists, one of which is a checklist, sanctions, antitrust, compliance kind of checklist. And they need to give us this information, and we would manually run the AML review. And then, I don't know when we did it, a year ago or so, we moved to WorldCheck. And now that name gets put in and it's constant. So 24 hours a day, they're running every single name that we've put in. And if there is ever a problem, we're going to get an instantaneous alert. So that's great. That's much better than what we were doing before.
On the AI policy, it's such an umbrella policy. You've got elements around investing, operations, legal. So there's two elements. One is, what does the SEC say you need to have, which is probably very vague. And then how do you tailor that to your own business?
My starting point was, let me see what the SEC has said publicly and what guidance it's given about AI. And then from there, started to develop a policy. And I want a policy that is user-friendly. And by that, I want to be able to hand it to our team and have them be able to read it and understand it and follow it. So I don't want it to be 55 pages long and full of jargon and dense. With that in mind, I started to just lay out what do I think the key points of the policy should be. And I'm not done yet. And certainly, maybe other people have different ideas, but I've started with the idea that we'll clearly define acceptable AI engines. And we don't have those yet, as we've talked about, but those could be any number of things. It could be ChatGPT. In some of the hypotheticals, we've talked about an AI engine that builds a model, an AI engine that reviews marketing. Clearly define acceptable AI engines, make it clear that list is subject to change. It's going to be something that evolves over time, but that any new AI needs the clearance of the compliance department. And then I think beyond that, clearly within the approved engines, clearly define the manner in which employees are allowed to use that engine. So are we allowed to upload confidential information, yes or no? You might be able to use an engine to build a model, but it has to be completely anonymous, or you can use an engine to help write an investor letter. But I think that the policy needs to define the manner in which employees can use it. And then from my own perspective, from what my department will do, I think we need to define the risk management procedures around it. So that would be number one, due diligence. So making clear that we need to do due diligence, which, as we've talked about now at length, might vary based on the machine, but will certainly involve a deep cyber review. And then also from a risk management perspective, we need to maintain human oversight of this machine. And part of maintaining human oversight of the machine is, I think, engaging in testing. And that's a core part of, I think, any compliance program is we have all of this stuff going on, and we, as part of throughout the year, we test. So we test management fees. It's periodic and it's random, but it's to make sure that we're complying with the terms of our agreements. We testing for everything that we do. And I think here we would think about how we would engage in testing of a machine. But I think one of the things is looking at its output and trying to determine, is it exhibiting a bias that is identifiable? Is it producing results that are accurate over time? And using that testing to determine whether or not we continue working with that machine. And then I guess the final point, which maybe doesn't need to go into a policy, but that is really important, is how are you marketing and what disclosures are you making around the use of that machine? And that, I think, comes in two different ways. One is overstating your reliance on AI, essentially making sure that we're not marketing ourselves to investors as a fund that relies heavily on AI or has the use of a proprietary AI system, and we don't. So I think that's very important, is putting parameters. And we've seen this in other spaces with ESG, right? Quant is another great example where you have a fund saying, I'm a quant fund, I'm an ESG fund, I have proprietary AI, when in fact you don't. So I think that's really important, is making sure that a compliance department is aware of how you're marketing your use of these technologies. But then on the flip side is, if you are using AI in any way, making sure that you have adequate disclosures in your offering documents, in your partnership agreement, to the extent there are disclosures there, or subscription agreement, in your Form ADV around the risks and potential benefits of using AI. That's how we're thinking about it anyway, every single day.
And it will evolve as we see how the regulators are going to think about it, what we're expecting, and it's going to iterate from here.
Yeah, absolutely.
Anything else you're excited about in this area, where you're going, what you're thinking about?
I am excited. Technology can be scary, particularly when it has the capability of upending your job and potentially rendering you unnecessary. That's like the last thing I want to be, is have a machine just take over my job and do it better than I do. But keeping that sort of fear, putting that fear to the side, I'm just excited about the opportunities that I will have to become a better, more efficient lawyer. And there's, as with any compliance professional, I think every single job has a lot of grunt work. The more that we can effectively and efficiently push that off, the more we give ourselves the gift of time, which none of us have, but time to think deeply and more deeply about legal issues, time to spend reading deeply. When I say reading deeply, I don't necessarily mean a novel, like the most recent version of the partnership agreement. Time that we don't always have because we are so busy doing so much, that I'm very excited about the efficiencies that may come from all of this.
Yeah, there's definitely some good things to come. Kathleen, thanks so much. I want to close with two questions. And one is, what advice would you give to an emerging manager from a legal and compliance perspective?
I think this is probably advice anyone would give, which is give legal and especially compliance the respect that it deserves. And I don't mean me as a human, but don't put compliance to the side or think, oh, the law requires me to have a CCO, so let me just put a CCO hat on somebody and walk away from it. It is really important to, from day one, create a culture of compliance within your firm. And that definitely starts from the top down. I'll say both of my bosses, Matt and Lee, I think have that respect for compliance and have created a culture of compliance. But it will serve all emerging managers well to build a strong compliance program from day one and to invest in that program. It matters to LPs, not just as a check the box ODD matter, but we are taking their money and they are entrusting us with it. And it is vitally important that we have the back office, the operational and compliance procedures in place to safeguard that. So that's my advice. It's very self-serving advice, but it's advice nonetheless.
We'll take it. And the second question I have is, what book, article, other material that you commonly refer to people?
I read all the time. This is a good question for me, but it's hard to distill it down to one. But I think the book that I end up referring to people the most, that I think at least resonates professionally, is Range by David Epstein. Have you read that?
I have not read that, though I consider myself rangy.
Then you should read it. Just like people like to exist in bubbles, like political bubbles or social bubbles, you're going to read this and you're going to agree with it if you're rangy. But it's several years old at this point, but I have recommended it to a number of people. And as the title says, it's about an homage to Range. Basically, it's about the benefits that, without diminishing that there are people, that there is a need for hyper specialization in the world, it really speaks to the benefits of having broad-based experience professionally. I thought of it also as a good guide as a parent. I think he didn't write it as a parenting book, but as we have this urge to push our kids into sports is a great example, right? Super specialized soccer by age 4. This book would maybe be an argument against that. And it gives a lot of great examples as to why trying different things, whether it's as an athlete or as a professional, ultimately will make you better in the long run. And he speaks about a lot of innovation that happened almost by accident because of people's range. And the other thing he talks about that I like is this concept of match quality. Match quality is the idea that the more you try things, the more that you're going to settle into the thing that suits you best. And when I look back at my own career, I think it was having done so much, so many different things from day one into where I am now that I think I have found my match. If I hadn't taken the job in 2016 that I didn't really like, would I have known that?
And now you know. I'm going to go get myself a copy tonight. Kathleen, thanks for the time. Love your perspective and insights, and look forward to staying in touch.
Thank you. You too.
Take care.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.